Hey, business owners, welcome to this webinar on the 2022 federal budget. Today, I have two senior partners from Grant Thornton who I'm going to, pick their brains so that we can get all the tax tips we need to get just before this financial year finishes on 30th June. Please welcome Sandie Boswell and Raj Deepan, ladies and gentlemen. Raj and Sandie, huge welcome to both of you.
Good to be here, Dinesh.
Thanks, Dinesh. Great to be here.
Thank you. So for those I haven't met yet, my name is Dinesh De Silva. I'm the founder and CEO of NetStripes. I want to introduce Raj and Sandie to you for those who haven't really met them yet, because both Raj and Sandie have been doing webinars and interviews with us since 2020 timeframe. So they are not new to the NetStripes community. And Raj is the tax and advisory partner. Raj works with global tech firms and high-growth Australian startups, providing CFO services and tax compliance and business and tax advisory. Now, Sandie, on the other hand, is a partner focused on innovation incentives, has been across this space for over 20 years. Is that right, Sandie?
I think it's a bit longer, but I always make it shorter so I don't look as old.
My goodness.
It is right, yes.
I wouldn't have guessed it. Sandie has worked across multiple industries and works with not just multinationals, but SMEs and startups as well. She's an expert in what she calls the main platforms of support for innovation, the R&D tax incentive, and assist with people and companies to access the EMDG program as well. We'll discuss that soon. Sandie, of course, has lots of board experience and loves travel. I don't know how she does that with the pandemic. I'm sure she's got lots of plans happening right now. Before I start, is there anything, Raj and Sandie, you would like to say? Because I have quite a few questions I want to ask you. I have actually 8 questions I want to ask Sandie and Raj in their different areas of expertise, ladies and gentlemen. I can see my green screen coming up, right? Let me fix that.
It's back to NetStripes now, Dinesh.
Yes. Let me fix the... Okay. It's always good to have some tech issues to keep us on point. And I'm sure something will happen and we'll fix it up. Okay. Raj and Sandie, I have 4 questions for each of you. But also, ladies and gentlemen, if you do have other questions, go to the Q&A and put your questions in there, not in the chat, but in the Q&A, and we'll come to that. Let's get started with Raj. Raj, the first question is to you. As a senior partner of Grant Thornton, Raj, what are the biggest tax changes that you have seen in the budget impacting small business specifically?
Yeah, thank you, Dinesh, and it's a pleasure to be with you again. I think Sandie and I was saying earlier, this budget, obviously there wasn't too much reform in this budget. We weren't expecting too much reform because obviously we've been through the pandemic and obviously there's JobKeeper, JobSaver, JobMaker through the pandemic, and that obviously cost the government a lot of money. So we actually thought going into this budget, there was potential to increase taxes, but luckily taxes have not been increased and remained the same, so which is a great thing. In terms of small business, there were a couple of things in the budget that we thought was very relevant and sort of in keeping with the times. So one is what they call the skills and training boost. And that's a 20% additional deduction on training expenditure. So basically it's about skilling our people for the 21st century or beyond the 21st century, for the technology revolution we're in at the moment, right? So So basically, if you spend, let's say, $10,000, it's a small number, but let's say $50,000 you spend on training, you get a tax reduction for $60,000. So an extra $10,000, right? So really encouraging small businesses to get their people upskilled to deal with the 21st century issues in running a modern business, right? So which I think is welcome. Training is always good. L&D is always good. The next one, which I think you might be particularly interested in, Dinesh, and I know this is something that you have been canvassing for a long time, is what they're calling the technology investment boost, right? Which is also a 20% deduction, an additional 20% on investment expenditure linked to increasing the technology capability of a business. So it could be in the area of software. It could be in the area of software. It could be hardware. It could be developing their website, marketing and developing their website. It could be anything linked to technology. It could be cyber. It could be cyber security, because that's a big issue. So just a point on this, Dinesh, and is that you get 120% deduction, right? But it's capped at $100,000. So let's say a business spends $100,000 revamping their technology. It could be a combination of hardware, software, cloud, website, cyber, right? Spend $100,000, you get $120,000 deduction. So if you now you sort of combine that, and this goes up to June 23. So if you combine that with the accelerated write-off that was already made available in the previous budget, so basically you spend $100,000, you get $120,000 tax deduction, right? Whereas under the previous rules, if you spend $100,000, you might get that deduction over 5 years. So you might get $20,000 a year. So we've gone from getting a $20,000 deduction a year over 5 years to now getting a $120,000 deduction one-off. So it is a very good time coming out of the pandemic for businesses to invest in their technology between now and June 23. So you've got just over a year, a year and 3 months to go. And so combining both those measures, the measure in the current budget, which is a technology investment boost, and the asset write-off from the previous budget to get $120,000 deduction. So it is a good time for small business to invest in this area. I think so. This is particularly interesting to you, Dinesh, because you've been canvassing for this for a long time. Basically, in effect, enabling small businesses to compete with the big boys, right? The big end of town.
Absolutely.
So this is a very good measure in that regard.
Absolutely. This is a really good news for small and medium business, because in the past, the big businesses had the funding, had the money to create that digital transformation they needed. However, the small businesses were subject to the digital disruption that massacred multiple industries. And today, every single small business owner can go and bridge that digital divide using this incentive provided. Not only that, the government, the federal treasurer specifically said that this incentive was to bridge the digital divide, but also for digital adoption for small to medium businesses. As Raj said, ladies and gentlemen, you can get yourself trained so that you have the right skills and knowledge, not just you, your core team, but also towards the implementation of your digital infrastructure in strategy, your branding, your web presence, and your marketing, getting that right. This is so crucial because McKinsey says just taking a existing business and wrapping a website around it is not digital transformation. And this is a mistake that so many businesses have done. So Raj, thank you for that. Absolutely well articulated. So as you mentioned, there are 15 months for us. What I am not clear, I don't know whether it has been announced. If you can let us know, is this 100,000 per business over the 2 financial years that we're about to see, which is the financially ending 30th June now, plus another 100,000 in the financial year 2023, or is it one?
No, it is per year, Dinesh, right? So you're right. So you can spend $100,000 between now and 30 June and another $100,000 in the following financial year. So it is $200,000 all up.
That's fantastic. And the way the government or the ATO says classifies a small business, how do they classify a small business? What's that?
Yeah, it's $50 million, Dinesh, right? So any business under $50 million in revenue.
Fantastic. So,
yeah.
and so for SME businesses up to $50 million, they have this benefit. That is huge. Raj, thanks for starting with that. What a great start to this webinar. Sandie, I want to go to you next. And talking about digital, bridging the digital divide, I think the next question is innovation. Because every small business, whoever you are, you've got to innovate. And innovation is, and even with innovation, I think there are a lot of changes in this new budget. In this budget, Sandie, can you tell us what the main changes are?
And similar to what Raj said, I think it was a bit quiet on the, strong innovation plays, but it had it intertwined throughout all of the announcements. Which I thought was really interesting around the focus on using innovation to kickstart the economy, to bring back manufacturing onshore, and to ease some of those supply chain pressures that we've seen really come to the fore during the pandemic. Interestingly, there was a $15 billion National Reconstruction Fund that's going to be jointly funded by the government, private sector and superannuation funds. And that's really around modern manufacturing, technology and innovation projects. So that's a big cornerstone of the budget. A lot of other things are really aimed at the mums and dads voters. So things like aged care, childcare subsidies, cost of living measures. So we all, enjoyed that reduction at the fuel pump. But then also there's this focus too on creating new jobs. So again, what you're talking about, the drive towards digitisation is really interesting. And what the government has done here is really pledged to support the creation of, I think, 1.2 million technology jobs by 2030. And I've seen some stats recently of a study done that 41% of jobs by 2030 will be digital based. So everything that we're talking about just in these first few minutes is all around digitisation and getting technology enablement into the Australian economy. Sitting underneath that, obviously, is innovation, and that's sort of the rock of how to get these technology enablements and digitisation up and running. And as you say, it's not just about plugging and playing, it's about doing some different things in your business. So really pleased to see that the government's acknowledging that innovation is really at the cornerstone of that digital, revolution that they want to power up by 2030, which is pretty short time frame. Both the opposition, what's interesting this year, I did pay a bit more attention to the opposition reply than I normally would. And obviously the budget was a bit earlier this year than it normally is as well. But the budget reply by the opposition was very similar. It was all about focus on our natural resources, focus on bringing back sovereign manufacturing, and, those two things combined to kickstart us, through to getting some productivity increases. So a lot of new job creation, a lot of new projects will be starting as a result of the funding that's been put into these projects. So that's exciting from a business point of view. I suppose they're all high-level things, though, so how do SMEs really get involved in those? But I think sub-projects will fall out of those, and there'll be a lot more people in the employment market that are being trained in these skill sets that are really important. So no sort of easy, SME innovation fix, but a lot of things that I think that they can pick up and use over the next 12 to 24 months. Just gone on mute.
Lost. It's back.
Better get off mute first, eh? Sandie, thanks very much for that. I know a lot of small businesses think, innovation is not for us. Innovation is really for the likes of Apple, for the likes of big business. This is not our domain. But let me tell you, innovation is for everybody. Small business owners, you guys have been in your industries for 10, 15 years. You know what works in your industries. but you also know what sucks in your industries. And there lies the opportunity to change and change and innovate in your industries. Those areas that your customers still find it painful, the areas that you still find frustrating, those are the areas that we can change and innovate. And the government has research and development incentives that you can latch on to, apart from what Raj has already mentioned, to the incentive, the tax deductions to bridge the digital divide by adopting through the adoption of digital. There are research and development incentives that you can access. Sandie is an expert in this area. Sandie, what are the R&D incentives available, and how do we get access to them?
Well, the cornerstone of the Australian government, and that these regimes exist around the world, because the fight for the innovation dollar, which I think we talked about when I was here last time, is really strong. So people have a lot of choice around where to park their projects now globally. But what the Australian government has had in place for many, many years is their main flagship program being the R&D tax incentive and a lot of other direct government grants. So the R&D tax incentive is set up. It has two tiers. So in this case, SMEs 20 million under can access a refundable tax offset of up to 43.5 cents in the dollar. That's really attractive. It's almost like grant funding, but it's a self-entitlement program. And if you're over 20 million, you can access up to 8.5 cents. So it's a nice sort of, if you're in a tight profit-making business, 8.5 cents is a nice thing to get. We have other direct supporting programs, and another one that we work a lot with our corporate clients here at Grant Thornton is the Export Market Development Program. And that is actually a program that has been changed a lot in the past 12, 24 months and has moved to a forward grant program. But again, it's an entitlement program, so it's not competitive. So often when we think about grants, we think, oh, we have to go and compete. We don't know if we're going to get the money. So it's a little bit harder to get because they're giving, they want to support those sort of really blue ribbon projects. With the MDG, it's about helping companies and people, because sole traders can also access it, so that micro businesses can set up and access support for marketing offshore. So they can get some forward funding now, but they have to spend it to get it. Like all things, it's complex, but we do help clients get it on a regular basis. The FY23 program is about to open, and we'll talk about that as we go through. But for me, and then there's what's also coming is the patent box. And if you want me to, I can touch on that now, Dinesh, if you'd like.
Absolutely, absolutely.
So the government's also adopted and announced in last year's budget that they'd introduce a patent box. Pretty limited application at this time, but it's going to support corporates to undertake and protect their IP here in Australia, and they're going to get a concessional income tax rate of 17% versus what they'd normally get, which can vary between 25, 26, 25 to 30%. It's effective. The bill was announced and was tabled in Parliament in May. In February, and it unfortunately didn't get passed before the government went into caretaker mode. So it's still a bill in Parliament. It applies to patents granted or issued after 11th of May 2021 and is in respect of income years starting on or after 1 July 2022. I just wanted to get that right from reading the notes.
It's the next financial year.
Yes, and it's only for future granted patents, so it's not going to be retrospective. In the budget, they extended it to ag tech and also to clean technologies. So, but they're saying that they think that the program will cost about $120 million. So I don't see that as a big bang sort of impact. But I suppose if you are doing patents, it is a nice thing to get. So if you're wavering on that big cost of doing a patent, now's the time to think about, well, should we now go and do it if you're in those sectors? So biotech, ag tech, and clean tech. We're hoping that as the program continues to build, that they'll expand to all sectors, which would be a nice outcome for SMEs.
Fantastic. Thanks, Sandie, for touching on the patent box as well. Now, coming back to the research and development grant, what are the new changes to that R&D regime that came about in this budget?
Yeah, nothing in particular, but there were a few things from an administrative or regulatory point of view that I really wanted to highlight today. So for those SMEs out there that claim computer software or develop computer software, there's been some new guidance released. Now, it's really important to have a look at that because it gives you some really key things that the regulators are looking for, and it really hinges on, I think, two things. Record keeping is really important, and if you're interested, we can certainly send you through some more detail if you'd like it. But they talk a lot about keeping records, and they talk about evidencing unknown outcome. They just don't expect you to say, look, I can see this idea, I'm just going to go and do it. You have to show to the regulator that you've done some research, that it doesn't exist elsewhere. Now, this is sometimes a bit of a hole, and we do help corporates do what we call state-of-the-art searches. So things where you can actually check from a technical standpoint that people haven't done what you're thinking about doing. That guidance is very clear that the regulator wants to see that evidence. So that's something that's new. It's supplementary to the guide to interpretation, so it sort of intermingles, but I think it's a really good thing that this is out there. But that focus on unknown outcomes is something I want people to recall from the discussion today. Another thing that's come out is a clinical trials determination. And essentially what that means is the government is saying, look, if you do these certain type of trials, they will be eligible core activities. There is some practical implications on how to apply for that. So please feel free to reach out to us if you are doing clinical trials as to how to apply for it under the R&D program. And it covers certain types of trials. So phase 1, 2, 3, and some pre-market pilot stages. So again, just have a think about, because that it streamlines the process of you applying for the program. So that's a really good positive step for the biotech sector. I think it just allows them to really know, right, we're going to get this support. They won't get reviewed if they apply the determination. So there's a bit in that. So I recommend, again, reaching out to your advisor, to Grant Thornton here. We've got a team of 20 specialists just on innovation who can talk to you about this. I think the last thing, and that's effective from 1 April 2022, so that can be in this current year. Big deadline coming up on the 3rd of May. It's normally 30 April, but because Queensland gets a public holiday on Monday for Labor Day, the regulator has extended the deadline for FY21 claims to 3rd of May. It doesn't really roll off my tongue like 30 April, but 3rd of May this year. There's not that long to go through. We are still working with some corporates on that. And we also saw some administration changes, just clarifying about RSPs and some other things. So whilst no big bang issues in the budget, Dinesh, there is some meaty things out there that you need to be across to make sure that your claim is as robust and supportable as it can be. And also, if you sit in that clinical trial space, that you can access it quite easily. But you need to do it in a certain way. So just reach out to get some help on that. But, pretty good. I think the government's really got behind supporting innovation in Australia, which is absolutely what we need. We need a strong innovation support system here for us to be a global player. And I'm really pleased to see that they've got that support behind these programs.
Absolutely, Sandie. I couldn't have said it better about the need for government to support innovation, and especially innovation amongst the SMEs, because I'm a true believer. The SMEs of this country understands the industries intimately, and it is in their knowledge of what works in their industries and what really sucks in the industry that create opportunities for change and innovation. One question I still have for you is that small business owners, we know, don't like a lot of record keeping. We are time poor, they are time poor, and the innovation, the R&D program needs a bit of record keeping. Would you mind explaining what are the types of record keeping they must keep in this situation? And also the question after that is how do organizations like Grant Thornton help SME businesses? I know you guys are very good with the larger businesses, but how do you help SME businesses with this type of requirements?
Yeah, and interestingly, Dinesh, Great question, because we actually work a lot with SMEs. I mean, I deal with about 300 clients a year, and a lot of those would be in the SME space, in fact, majority. So what we do here at Grant Thornton is really help companies grow and add the value at the certain spots in that growth cycle so they can get through those sort of hard years and then really expand quite quickly. So for us, I love doing that. I really enjoy working with founder-led businesses, with agile businesses. So I was just thinking as you were chatting then that small businesses are much more agile than the MNCs. Clearly they've got a lot of money behind them, but I think that passion and for what they're seeking to develop or improve or launch in the market really comes through day to day when you deal with them, and that's why I love dealing with SMEs. But so just going back to your question, it is a bit like how long's a piece of string, but there is some key things to think about, is really substantiating and documenting the experimentation that you do. And I know that sounds really scientific, but remember that the program is relating, and I'm talking about the R&D tax incentive program here, it's supporting commercial R&D. So it's supporting R&D in a commercial environment. So they use scientific terms, which is okay. So when you do an experiment or a test, you need to make sure that you document it and you keep it. And you do that documentation in year. Doing those pre-searches. So what did you do to determine that it couldn't be known in advance? So what literature searches did you do? What Google searches did you do? Did you do a state-of-the-art search? And they're the sort of things we can help you do. We run documentation workshops with clients, not for a very large cost, but where we say, okay, walk us through the company documents that you have and that you normally keep for the R&D or your projects, and we bolster those and we help them develop them so that they have a robust claim that can hopefully withstand review. I mean, we bring our sort of experience of dealing with the regulators to those workshops. So we really try and use, and as does the regulator, their internal documents, but it must be like trial logs, diary entries. I know who uses a diary anymore, but I'm talking about JIRA logs, evidence. It can be emails. Timesheets are great, but don't have to be there, but definitely the ATO likes them. And we can help. We implement timesheet systems with corporates. We've definitely done that several times in the past 12 months. But I also like this whole documentation mindset. One last thing I'll touch on is R&D governance. Now, you might think for an SME, do we really need to worry about governance? And I think the answer to this is yes, because when the ATO comes in, they say, tell us about your process. What's your R&D process? And some people go, what process? We just do it. And of course,
that's not good enough.
No. So what we develop is we've got sort of a R&D governance light, as we do with sort of tax governance light, where we come out and we say, well, okay, we know you don't need the multinational bells and whistles, but what's your process, and let's document it. So we're doing that now with a number of clients. So the first thing you can hand over when the ATO comes and knocks is, look, we've got a process. Here it is. Here's how we ID our projects. Here's how we document them. Here's the collaborative. We use an advisor, but we don't let the advisor just, go rogue into the business. So it's very collaborative. So it's all written down. It's contemporaneous. So one thing to think about from an SME point of view is just a short document that outlines your process and is updated on an annual basis. For example, the ATO wants to know that you've applied the taxpayer alerts. Really important. And just saying that in your governance document that you're doing that, and that you do it, of course, is really, it gives them a lot of comfort. But similar with our more broader tax governance.
Yeah, absolutely. Yeah. I think documentation is key, and saying you don't know is not a good answer. So saying you're aware, you've got the advice, you know what's required, you're complying with those requirements. Like Sandie said, it doesn't have to be the bells and whistles of everything, but there is a process.
Yeah.
And it comes down to governance, really. I've had some reviews, recently, high net worth individuals, governance, and even though everything was fine, documentation was important as well. So as a result of one of those reviews, we decided to go and actually implement a tax governance, framework and documentation.
And so don't be afraid of it because you're an SME. To me, you can just have a form of that. And I think that'll stand you in really good stead with the regulators and by regulators, I'm really talking about the ATO and this industry here, but makes a big difference.
Thank you, Sandie. Business owners, you must be wondering why I'm spending so much time on the R&D grants, because this is an important grant that you can use. It can be very beneficial for you if you know how to use it. However, before you get to that stage, there may be other things to do, as Raj mentioned. So we have the technology boost of up to 100,000 that you can use, and you can get a tax deduction of not 20%, as Raj mentioned earlier, as it was for capital items. Now you can get 120%. So that is fabulous. Now, Sandie, thank you so much for your answers. I'm going to Raj. Ladies and gentlemen, I have some big questions for Raj. These are directly about what matters to each of you just before tax time. So, Raj, my first question to you is about superannuation, because this is an important aspect for small business owners. A lot of SMEs, overlook superannuation as such. Now, can you tell us from the budget, what were the main changes that we need to know?
Yeah, thanks very much, Dinesh. Obviously not technology related or innovation related, but still, important for small businesses and also the individuals associated with small businesses to understand their superannuation requirements. Super has gone through a reform over a number of years now, and there's a further reform that's happened in the current budget. A few things I'll mention over pretty quickly. We used to have a $450 exemption threshold. So anybody, let's say one of your employees earned less than $450 a month, you didn't have to contribute super. Now that threshold is gone. So even if you can get somebody to do a little bit of piecemeal work where you're paying them less than $450 a month, you still need to now include them for super. The second one is more for individuals, not for companies, but the individuals associated with super. The government introduced this voluntary contributions for the first home super saver scheme. It's called the first home super saver scheme. It's increased that from 30,000 to 50,000. So you're able to now put money into super to save towards your first home, which is everybody's dream, I guess. So that's been increased from 30,000 now to 50,000. Access to super, on retirement, when you get to 60, and again, this is impacting individuals associated with small businesses, could be shareholders, could be directors of these SMEs that we're talking about. So when you reach 60 and you're selling down your home, you can boost up your super. So that's been now increased to 300,000 per spouse. So let's say a couple running a small business get to 60, they've sold their business, they can now contribute, $600,000, $300,000 each into their super. And we know that super is very effective in retirement because that money then rolls into what we call pension phase. And then in pension phase, you're not paying any tax in your fund, and you're also not paying tax on the amount that you're withdrawing as a pension. So that's been increased to 300,000 per spouse. There used to be a work test for super contributions between 67 and 75. So once you reach the age of 67, you had to satisfy a work test, which was I think 30 hours or 40 hours in a month, if I remember the numbers correct. But that work test is gone now. So you don't need to satisfy work test. The government saying you can carry on contributing to super until 75. The last one is just an administrative measure. This is for super funds where you have, let's say, 2 members, or you can have up to 4 members in a self-managed super fund. Couple could be in accumulation. Let's say the children could be in accumulation. The parents could be in pension mode. And it gives discretion to the trustee to calculate the exempt income. So it's really for your super fund accountant. So which says that there are different methods of calculating the exempt income, and the discretion is given to the trustee. So there are about, how many mentioned? I mentioned there are 5 there. The ones that are relevant really for a business is to make sure that they're contributing to their employees from $1 now and not from the $450 previously.
Raj, thank you very much. Very extensive, mind you. What else would I expect from you, having spoken to you all this time, all these years? Now, Raj, not just super, at this time of the year, business owners also worry about their personal income tax. What changes do they need to know? Yeah,
so I think the government recognized, and some people call this what you call election sweetener, right? It's just recognizing the fact that, there is cost of living pressures on people, on SMEs, their owners, and so on. So they have increased what we call the low and middle income tax offset by $420 to $1,500. So there's an increase in that tax offset of $1,500, and that applies for this year for the 2020. So one-off measure, so applies for this year. So what that means is that you can now get up to $1,500 back depending on how much income you're earning. I think it caps out at about $126,000. So once again, $126,000 doesn't apply, but anybody earning less than $126,000 have an increase in that offset by $420. The other big thing that's going to come in, this is 1 July 24, so that's a couple of years away, is the tax reform for individual tax, right? So I remember on the last time I was on one of these with you, Dinesh, the year I came to Australia, the year 2000, I think the highest marginal tax rate kicked in at $60,000. So you paid 47% at $60,000. So from July 2024, it'll kick in at $200,000. So the highest marginal tax rate at the moment kicks in at $180,000. It'll kick in at $200,000. And they're also removing the 37.5% tax rate, and they're reducing the 32.5% tax rate to 30%. So what that means is that anybody earning between $45,000 and $200,000 as of July 24 will pay 30% tax. Which is, I think, is a fairly competitive tax rate when it comes to individual tax rates, right? So 30% between 45,000 and 200,000, and about 200,000, then you're paying on the 47%. So that's just a marginal tax rates reform. I think we had 6 marginal tax rates back into the year 2000, and now we're getting down to 3 marginal tax rates. So simplifying the tax system and saying that bulk of our people will pay tax at that 30% tax rate, which is the corporate tax rate for large business at the moment, right? So it's just linking to that rate.
Thank you. That should be attractive for people because it's easy to calculate, less confusion, hopefully, as well, isn't it?
Yes, absolutely. Absolutely.
Raj, we are now at that time of the year. We've got to start planning for 30th June. So as we head towards the end of the financial year, what tax planning considerations must business owners do at this time?
Yeah, good question, Dinesh. So what are we, middle of April, like a couple of months to go to the end of the financial year, right? So we talked about those 2 initiatives that came in this year, which is the training one and the technology boost. So obviously you want to make yourself avail of those, then obviously spend that money between now and 30 June. And also the couple of measures that were from the previous budget, which carry on to 30 June 2023, which is the temporary full expensing. So the temporary full expensing is still available for new assets for companies with revenue up to $5 billion. So that's quite big. So companies up to revenue of $5 billion can buy new assets between now and 30 June 2023 and expensing in full rather than depreciate over a number of years. And SME businesses, which is the $50 million revenue test. So if you earn less than $50 million or you make less than $50 million in revenue, then you can apply to new assets as well as used assets. So you can buy used assets, so buying a motor vehicle, buying any machinery, buying equipment, investing in a new website, anything can be claimed under that provision between now and, as I say, it goes up to 30 June 23. In the budget, the government did not seek to extend that. So we don't see that extending beyond 30 June 2023. It was a COVID measure and it's been left in place. So these measures, even the technology boost, the additional extra 20% only goes up to 30 June 2023, right? Not beyond that. And the loss carryback as well, which is still available, right? I think we spoke about that last time. Again, that recognized the fact that companies could be making losses through COVID in FY21, FY22, which is the current financial year, and then FY23, which is the next financial year, and allows companies that make losses to carry back those losses. You normally carry forward losses, but allows you to carry back those losses and offset that against profits you made in FY19 and FY20, right? So you can go back up to FY19. So a good thing would be, for example, let's say you're investing in some technology, and as a result of that, you're claiming your 120% tax deduction, you're incurring a loss. So now you're going to be able to take that loss back. And if you're paid tax in FY19 or FY20, claim that tax back as well. So that's an additional incentive, again, something for you to work with your accountant, right? So these are the measures that are really COVID-type measures that were in place that are flowing through to 30 June 23. Apart from that, the standard year-end stuff, Dinesh, in terms of super contributions, the super contribution cap per employee is $27,500 for this financial year. Last year was 25. So obviously work with your accountant, work with your financial planner. If you want to get that into super, you've got to get that in before 30 June. You can't leave it till 1 July. It's got to be in receipted by the super fund by 30 June in order to claim a deduction. And also generally just looking at your year-end cutoff, right, which is a traditional planning measure that's always been there, bringing forward any expenses that you want to bring forward in the current year, and sort of deferring income into the next year, right? So that's really timing. So working on those, and it's important to have up-to-date financials. One of the things we talk about now with SMEs a lot is with technology and the real-time access to information is that you're looking at your information on a regular basis, so you know exactly where you're at. As at the end of May, I had a client last week where we spoke about declaring an interim dividend for this financial year. It's a $10 million business, and the CEO commented that we have real-time information now. We can make that decision in July. Previously, we would have had to wait another 6 months till the accounts are drawn up to work out how much profit you've had, to work out what dividend you can declare. Whereas now he announced to the employees that he'll be declaring an interim dividend soon after the end of the financial year. So obviously keeping records up to date is important. But yeah, so those are the measures I think to look out for between now and one other is if you're debtors, look at your debtors, bad debts. If you've got bad debts, the requirement is to obviously collect the debtors as much as you can. But if you want to write a debt off, write that off before 30 June. The requirement is to write off before 30 June. And also if you're a business carrying stock, look at your stock and see whether stock is obsolete. Get rid of stock or value the stock at obsolescence value, or if it's worth less than what it is, then we'll value it down. So because reduction in stock also helps reduce the amount of tax you pay. So again, traditional things in terms of debtors and stock, looking at that between now and 30 June.
Raj, thanks very much. Business owners, there you go. You heard a host of things we can do before 30th June. Raj mentioned with regard to debtors, with regard to stocks, with regard to superannuation, with regard to even paring back losses that you make now, which you can claim off the profits you paid, tax you paid on your profits years, a few years ago. Now, with all that, we also know that right now we can prepare ourselves for the future. We can prepare ourselves for a new digital future. That is the future because the pandemic has accelerated digital adoption of consumers by 10 years, according to research done by McKinsey. What does that mean? Consumer adoption of technology, what would have happened by 2030? 2030 happened at the end of 2020. Now, what does that mean for us? What it means is that the businesses who can engage these consumers who are looking for technology related products and services and to consume products and services using technology, that we can be in front of them. We have a huge benefit. And the government now have come up with a host of incentives up to 100,000 this financial year, and the next financial year, another 100,000 for us to get deductions, not at 20%, but at 120% of our expenditure, of our investment. We also heard from Sandie Boswell, who's an expert in innovation, and who spoke about the R&D grants, about the patent boxes. Now, some of these terminology must be new to you. Of course, it's new to all of us. Now, we can reach out to these experts. We can find out from them what steps we can do. Like we've heard a million times, a journey of 1,000 miles starts with the first step. If you want to learn about innovation incentives, you can reach out to Sandie and Raj. If you want to know about digital adoption, where you can start with bridging that digital divide, using those incentives for your company, talk to anybody at NetStripe.